I'll do fuller introductions in just a moment. But we're also going to have a DigiVote coming up. And that will be on your screens in just a moment. And here's the question. There you go. How do you see your exports to the US and European markets in the second half of this year? We've heard about the challenges. How's it affecting your business? Increase, decrease, or no change? You've got about 30 seconds to press your button, 1, 2, or 3. Off you go. And, oh, we're split again. Pretty much straight down the line. So about 1 in 3 saying exports up, 1 in 3 exports down, and about a quarter of you, no change. So, again, looks like a confusing market. Let me move over here and let everybody know what's going to happen next. That is the panel discussion. We've got about 20 minutes, 25 minutes for this before we take a networking coffee break. And what I want to do is just bring up some of the questions that we've got going through at the moment. To remind you who's with me here today, Dr. C.H. Ng, Vice Chairman of the Hong Kong Electronic Industries Association, is over here. He's also Chairman and Managing Director of Suga Holdings. It's a company that makes electronic products, electronic components as well, under OEM manufacturer. Yves Lotowski, Chief Economist for Coface, next to him. Edward Leung, who you just heard from, and Dr. Steinbock as well, next to me. So, we will have an opportunity at the end of this panel discussion for some questions and answers from you. So, have those ready, and we'll come to you in just a moment. But first of all, I want to bring in Dr. Ng about this. Question, because you clearly are involved in exports as well. How do you see this environment right now? Because we've got some short-term news, which is dampening sentiment, both in the US and Europe, long-term trends, which we've discussed as well. But what impact is it having on business, are you finding, for Hong Kong exporters?
Well, the electronic industry, in fact, is the largest single sector for Hong Kong export and re-export. We feel that after the financial crisis, the US and European market are slightly or slowly recovering. However, say for this year, we are facing some new challenges. Because, for export, we need to produce products, and we probably know that for electronic industry, the semiconductor components are the major components in our products. And Japan, directly or indirectly, involved in a very significant portion of the semiconductor supply globally. Since the March, tsunami event in Japan, the industry are facing new challenges that there are shortage of supply of components. This situation looks like will last for at least 3 months, because the recovery on the supply of components not only depend on the manufacturers themselves, but also related to the recovery on the whole infrastructure, like the transportation, like the electricity supply, and those all affected the supply of semiconductor components. So we feel the markets, say from Europe and United States, the orders coming in pretty well, but the challenge will come from the supply side, that we need to work very hard to have second source, and also work closely with vendors on the component supply situation.
But the orders are there, you're saying, basically.
Right, right.
Dr. Zlotowski, we were having a chat beforehand about the mood in Europe at the moment, and frankly, it's not good. Yet we're hearing people are still buying. I mean, one way or another, the orders are coming through. How do you explain that?
First, there are some good news from Europe. The first quarter has not been that bad. according to the growth, especially of Germany. It was not such a surprise, but in France too, which is, I'm very eager to say that the growth is not that worse. So in the classification of Dr. Lang, maybe could go up a little. Anyway, but yeah, there are some. But of course, there are some. The problem that we were at the end of the last year, we were expecting a slowdown of the economy, of the world economy, for many reasons, because of the sovereign crisis and the fiscal austerity, because of the leveraging of the private sector in the US or UK. But in fact, in the first quarter, there were new negative shocks happening, which would, of course, trigger more deceleration, which has been the Japanese issue, of course, which is a supply issue. And of course, what's happening in the Middle East, which has an effect on the oil prices. So all that had new negative shocks to the companies. And then you would certainly see the 2011 years a little worse, some deceleration. We do not expect that there's going to be a major shock in terms of growth, but clearly, and the third element is the overeating issue in emerging markets. Now you see that more restrictive policies are implemented in many emerging markets, which also will have an impact on growth. So on the whole, we expect a deceleration of growth. So the environment for companies clearly is less good than it was in 2010, which was a clear year of recovery.
Mm-hmm. This brings us to the question of what companies need to do. In fact, this is the point of this panel discussion, what is the best strategy for companies to handle this. So we've got supply restrictions here in Asia. You've got demand, which is not so bad in Europe at the moment, but who knows where it's going to go. Edward Leung, I just want to come to you from an economist point of view. Your focus has been on Europe, but of course you're Asia-based as well. And you're at the Trade Development Council. What are companies telling you at the moment about what initiatives they're undertaking to try to get, or what do they want to see undertaken to get through this?
I think most of the company, when we really talk to those exhibitors and buyers in our trade shows, that we have a feel of what the business people are thinking. They, on one hand, they are quite reasonably happy with the orders coming through from overseas market. And they are more worried about the cost escalation. And what they're trying to do, one thing is try to control their costs as far as possible and bargaining very hard with their buyers. And some of them, they even will refuse to take order if they really that the price is too bad, and then they cannot make a profit, but taking a great risk. So we are going to see that, okay, and there's some sort of adjustment. And more small company may not be able to survive of the overall structural change, but the bigger company have a bigger bargaining power today.
Mm-hmm. So buying power is pretty much key to this, so
Yes.
which means scale is key to this.
Scale become more important, and then also they will launch new product, new design, and then so that have a more value added for a higher price. You can hardly raise your price based on your old product, so you got to have some new things.
So scale and innovation.
Yeah.
Dr. Steinberg, do you see it that way as well? You spend half your time in China, you spend half your time in the US. The Chinese companies have got these unique challenges to some extent because of price controls, which leads to things like electricity shortages and so on. And they also don't have the scope to increase prices in the US, and you're looking at the economy there. Do you see these changes taking place that we've been hearing now, innovation, increasing scale, et cetera, et cetera?
Oops. I really think that this is one has to look at this from the cyclical point of view and structural point of view. And if you look at it historically and look at the multinationals, what had happened in the early part of the century, last century, you had the European companies that were decentralized, focused on differentiation and so forth. They were succeeded by the American multinationals, focusing more on innovation, but still relatively domestic mindset. Thereafter came the Japanese with their high global integration efficiencies. And thereafter, we've talked about transnational solution to this, which is to use the best of all approaches, innovation, differentiation, cost advantage. I think that now we are at the new tipping point. And that has to do with the fact that, at least for now, in the emerging economies, you have multinationals that are learning innovation faster than people perhaps thought in Europe and the US, but are able to break cost or have been able to disrupt cost advantage in a way that other competitors haven't. This will change, and it will change faster than perhaps many companies from the emerging economies think, due to the appreciation of the renminbi and inflation and so on and so forth. But this, I think, is a really important point. There's another point that I would like to pay attention to. I have the pleasure to write bi-monthly columns to Global Entrepreneur, which is a Chinese magazine. I do it because it gives you an arena to follow kind of what companies think. And what made the greatest impact on me was the fact that many entrepreneurs in China, especially if they are senior executives or multinationals, tend to look at the US, looking at it against the Iron Curtain. They use the term Iron Curtain. And that's because it's so hard to get in the US economy. Now, when we talk with the Chinese executives about this, and we remind them that, well, it was pretty hard for Japanese at one point. It was pretty hard for Europeans to break in at some point. But for them, it's a very difficult situation and different situation. However, I'm now more optimistic than I was 2 years ago. I think that we are moving ahead in a way that might be beneficial for both countries. And by the way, in the US, as difficult as the situation is, it's also preparing way for what Americans would call the manufacturing renaissance. In other words, due to the cost cuts in the US, American labor force is becoming gradually cheap. And as Chinese labor force is becoming more expensive, in the next 5 years, we will again see a major shift. But for now, it's trouble ahead for the next 2 or 3 years.
Serge, do you see it that way as well? Because I'm interested. You're focusing on OEM manufacture at the moment, whereas if you really want to make your name, brand names are particularly one key way to do that. Apple is famous brand name. All the manufacture's done in Asia, mostly in China, and yet it's Apple that's got the name, that's making the money, is taking the market share. So, are you seeing changes in strategy amongst the companies you represent, or your own company, indeed?
Well, in fact, our original business were in OEM, but in recent years, we've been involved more in what we call ODM, development products. And well, by doing, say, electronic OEM, you're right that there are quite some companies are talking about going into OBM with their own brand. But considering the situation in Hong Kong, we believe that, or not believe, but we feel that it's appropriate that we do it step by step, because building up a brand, it takes time and investment. And for us, we use a little different approach to face this kind of challenge. Our approach is we pick up a kind of a specialized area that we put effort in develop that products or technology in those areas. And this kind of what we call the niche product or specialized product in general are not that affected by the economy. And secondly, there are less competitors that we are going to face. Because of those big companies, they are not interested in building niche products. However, if we can develop in different, say, quite a few different areas, then as a whole, then we can, grow the business in a pretty good way. So yes, there are challenges for OEM companies, but there are different ways to what we call transform into a new business model. But for us, we choose to go into the develop a specialized area.
Okay. I've got a couple of other questions I want to put in here as well, but I also want to open this to the floor, because we've got about 15 minutes before we take a coffee break. Does anybody have any questions that they want to put to the panel? If they do, please identify who you want to speak to, and it'd be nice if you could identify yourself as well, to the extent it's relevant. We had one question right over here, so there should be a microphone rushing towards you as I speak. If not, I'll bring you mine. There we go.